This is Toughname T, and today, the 3rd of March, I'm gonna make a video on V100 winners. Okay, as you can see, the bias is bullish since we have high highs and higher lows, and the market has been trading higher. So I'm gonna make analysis light from the daily chart. Okay, if I go to a daily chart like this, I can see there is a possibility of the market to reverse, maybe just land up in here. So it might still keep going up, and then if I have uh many options, like is it likely to go up there because we have a favorite gap 10 and the bearish order block, and we still have an imbalance there, and I mean we have the imbalance down there. So is it likely to drop first into this imbalance and keep going up? If that's the case, I'm not a swing trader. I do scalps for synthetics. So what I do, I just drop down into a 4 hour chart. So what I do, I look for possible buys. Okay, looking for possible buy setups. Like now, this is what I have here. You can see all the gaps have been filled except something here. All the gaps here are filled. So we have a very nice range where the price is going to drop massively and clean all these lows here, or even more. All these lows, we have very clean lows. And as you can see on a 4 hour chart, just simply by looking here, we got imbalances like that. So the price is likely to keep going up for that imbalance. So what do we do now? Institutional order flow analysis. So what we have right there, we got this fair value gap, the buy side imbalance, sell side inefficiency, where recently market reacted there. We got this swing high. We got this swing high right here. Let me maybe change the color, maybe blue. Okay, make it just like this. We have this swing high as buy stops. Oh, buy side liquidity. We got buy side liquidity just above this high. I'm just gonna make it BSL, buy side liquidity, above this high. Okay, so on a 4 hour chart, and remember this is a high time frame, we got that, and we know that the trend is bullish. So what do? We look for possible buys, possible longs. So I drop down into a 1 hour chart. Okay, not 2 hours, not 3 hours, because I know the 4 hour chart, the 4 hour market bias is clean, so I don't need to drop into a 3 hour chart. No, I mean uh 1 hour. Let's go directly into 1 hour chart. Okay, all right. As we drop down into a 1 hour chart, this is what I could see now. We got the fair value gap right there and the order blocks. Plus was already reacting there. So for me, if the bias is bullish, okay, let me talk this now. If the bias is bullish, I can have short-term sales in case this thing happens there. So do I hold trades? Yes, if they are in sync with the higher time frame bias, which means if it's the uptrending market, I should hold long trades. If it's the downtrending market, I should hold selling or short trades. But if it in that case, I do not hold this kind of trades and say maybe I'm targeting those lows to be clean. Since you got more imbalances to be filled at the upside on the 4 hour chart and the daily chart. So what I can do, I can go short there, target that favorite gap, shade exit, and look for possible buys. So like here, that favorite gap already reacted, so we're targeting the buy sell liquidity right there. But as you can see, price did not cross inside the favorite gap. It just whipped and crossed below it. So in some cases, it's like I can extend this more in time for more reference. And if price reacts, then uh, again inside the favorite gap, I need to see the up closing candle crossing like the way this candle is passing quickly like this, or creating that imbalance. I should see the up closing candle, not the wicks. So I go down into a 15-minute chart. Okay, going down into a 15-minute chart. This is it. We got that 1 hour favorite gap, but as you can see on a 15-minute chart, we got the series of up cross candles forming that uh, hourly bearish order block, overlapping with the sell side imbalance, buy side inefficiency. Just call it a favorite gap. That was a nice response there, targeting to green these lows and inside that 4 hour favorite gap. So now what do we do? And the current market price is just here. This is what happened. So like you can see, the market has been trading up higher. Okay, it's not even huge gaps, but there are small ones like this one here and that one there. There is another imbalance there, which is not filled, and it's in discount, which means it's in lower prices of this entire range. So you can target this, selling short, targeting this. What we sell short, as we can see right here, there is no any other imbalance. We have that hourly bearish favorite gap. So dropping down into a 5-minute chart. Oh, maybe no. Let me talk of the previous data in sync with institutional order flow plus what I call my kill zone. I'm gonna look at this thing here, okay? We said I spread my chart into this point. Now 30, 45, make it 45, maybe 45 until 15. That's where my kill zone is. So what I do, it's not the specific time. There is no specific kill zone that this is it, this is it. No, each and every hour has got a kill zone. So what I do, I go to 5-minute chart and show you what that is. Okay, this is a 5-minute chart. We got that marking time, but I usually mark the 40th. Just look at the bottom here. It's the 40th minute of each trading hour. Okay, until the next first 15 minutes of the next trading hour. So this is what I did, and it's not an indicator. Okay, so as you can see right there, oh shit, my connection. All right, it's back. I have that mark in time. That is my key zone. Every 40th minute of each trading hour, standard up to 15 minutes of the next trading hour. That's my key zone. So within that time, that's when I look for possible entry points in sync with my institutional order flow analysis. So now this is a 5-minute chart. What a 5-minute chart you need to minimize your risk, and you know the synthetics, the highly volatile. So if you don't know how to make risk management, you're gonna die. Risk management is very important. So like there, we got that. You see how I favor the gap. Same with the order blocks, the bearish order block. But if you try to keenly look into a 5-minute chart, you've got this imbalance right there. You got a favor gap there. Why should not enter right there? That's the possible entry, and you've got the two up cross candles, the bearish order block. That's a sniper entry. Sniper entry. See, price does not exceed the opening price of the up cross candles, the order blocks. So you get that sale. And during my case, and that's when I tried to enter short right there. Should I be scared of this? No. So what I just do next, let's look at this feed now. Let's talk of that, and now it's the other kill zone. We got a 5-minute chart. We extended that favor gap more in time, and that's what we have. And we got this as the uptrending market. Market trades up higher. It's trading much higher. So I was trying to make more shorts just here in that favor gap. But remember at the beginning of the video, I said if the market has been trading high, you should look for higher prices for good risk. And if you look for shorts, or yes, you're looking for short trades, one set short, you should be doing it hard with little risk, or you should minimize your leverage since you can be stopped out because you're going against the trend. But you can pick trades as well. Okay, so like what I have here, I mark that in time. Okay, what's the recent swing point is here. Look at the time. Let's go 40, boom, 5, 15. This swing forms during the kill zone. Let's look at this now. Look at this. Yes, it's 40. Make it 40, 50, extend it until 15. This swing also forms during the kill zone. Shit. Good. So we're looking for this price action. The market has been trading high. So should we chase the price in case any indicator of the possible reversal should happen. Okay, in case possible reversal pattern forms right there. We got that favorite gap. Okay, so what do I look? Do I just enter with the favorite gap? No, the logic is simple. What is the 40th minute? It's here. Mark that. Okay, I have my limits. Those are my limits. The limit in time. So I have that time right there, and I just mark it like that to indicate that's the kill zone. So I'm looking for possible trade entries during this kill zone. If I missed a trade there, okay, I missed a trade here, I look for possible trade entries there. What I look at the price action as it's reaching the PDRs. So like what you see now, it's been trading up, 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 up. So what I look for indicators or signatures of that it's likely to drop. And that's in a 5-minute chart, or you can drop into a 3-minute chart. Dropping into a 3-minute chart, looking at that. Okay, the bodies are crossing just at the premium high of that favorite gap, and price starts to drop. Do I enter short there? No. I wait for displacement. I wait for price to create a displacement. Drop much into a 2-minute chart, but even a 3-minute chart is good for viewing short-term trades. But I like using the 2-minute chart like that. So like what's happening, and I have seen the market going higher. I just can watch this until it reaches this level. Since you have seen the down cross candles are now violated at that time, the down cross candles are not violated by the bullish order flow. So what I look now, change your mind. Of course, I can change my mind and look for possible buys. Okay, right there. Since I can see this is a little wimpy, we've got institutional order for entry three. This very gap. Okay, got a favorite gap right there, and it was during the kill zone. When price reacted there, so you can have a possible buy there. It's alright. So my eyes are keeping here inside these candles here. So you see on a 3-minute chart, the candles are keeping closing just inside the favorite gap. Okay, and you see the price displacement ripping out gaps. Okay, go to a 2-minute chart. see price drops. And once you see these indecisive candles or range contraction candles, the range or the bodies of the candles is contracting. Just expect the next candle to be the expansion, as you can see right there. Same thing here, contraction, expansion, contraction, expansion, contraction, expansion. So price is now trading back into this imbalance. Let me go to 1 minute chart. Trade back there. Trading back into the imbalance. Inside that our favorite gap during the kill zone. So I can have a possible sell around 3380 and my stop just being there. And like short position right there. And this is what you do for risk management. You're not gonna trust where is the data, why should price go there, where is it going up there, what's it dropping, why is it doing this? Okay. So this is very quick. Short-term scalp. So your target is right at this 3 down cross candles, trusting that as order broke. But it seems to be turning going up. Let's check what happens later. Okay, we have that indecisive candle right there. Let me take this off. You know what I'm anticipating. You have that indecisive candle. So once you see this, what happens? You expect you get your results very quick since you're gonna see expansion either of the side, up or down. So once it happens like that, you see and you know that I'm gonna be stopped right very quick, or I'm gonna go in my bias of my anticipation very quick like that. So that I think happens there. Okay, it happens like that. Without a streamation. If you can allow more room for press to do its action since it's still inside uh, that very gap, you can do that. But if you can hold trades and say, okay, let me let the price go where it can go, okay, and allow more room for price to react, it's fine. But if my time is reached, I don't do anything. I just leave it, watch it. I do nothing. Once the time is reached, I do nothing, and that's it. So if you would have seen this before, because we are late looking at the chart, if you could have seen this before, you could have a possible bar right there, and yeah. So I'm going to talk a little bit volatility index 75. Solving a term. So like that, we got uh, everything right there as I was showing you in our discussion group. Okay, right here. We got that trade right there. Okay, that was our point of uh, initialization. That's where we started from. The 15-minute chart, we got the very short broke right there, and the market seemed to break this low, come back. So that market structure shift, and then to the downside displacement that order broke. And you've got queen lows or side liquidity. So that's what target. Okay. Yeah, we got that 5 minute, 15 minutes very shorter block, and on a 5 minute chart you got the small favorite gap. Very nice. During the K zone, sell short right there. Crane lows, sell side liquidity. I was looking at where did these lows form. It was I looked into a Howard chart. I saw that was uh, a bullish order block right there. Maybe I'm gonna look into the chart and show what that is. But I was looking more in the previous data like that. I got there was a very short block there, and price also reacted at the very short block, and this is very nice confirmation since you know that price is already in the institution order flow. So once it comes in the kill zone, price creates environment. I mean, its displacement cleans these lows and this one as well. And once it's retracing up back into, it's a 5 minute chart, but if you go down into a 2 or 3 minute chart, you can see, you can just find out that was slightly imbalance or the or order block right there. So that's where you got your sell targeting that. I talked about the Hawaii bullish order block. Okay, back into the kill zone, sell. Okay, and then yes, that's what I thought. The 2 minutes chart, and you got that very shortable after price reacted at the 5 minute very shortable. So say short sniper. Oh shit. Down. Okay. And that's what I was looking at. That very short up a bullish short up on how I shared it was represented by this candle high there. So setting short right there during the kill zone and then targeting this. It's not wimpy pips. It's good. It's a good trade for me. Short-term trade, scalp, good for me. But I'm targeting more these lows, and I would see a favorite gap on a Howard chart. So once price comes back right there, this is the reason why I do not hold trade, because if I say I'm going long there and maybe okay, yes, now this is a change instead of delivery, I'm targeting these highs for buy side liquidity because I've been buying. I will not care anything that was around there. My friend, I've tried that many times. Trades go in my favor and then I'm getting stopped out. It was really paining me. Once you have printed money and then to give it back to your broker, it's really pains. So once you have this kind of a thing, and this is the behavior of synthetic indices, you got a short-term order block that's gonna send price higher because we have also imbalance there. High into what? We got area of resistance or area of supply. Those is supply and demand. We got another area of resistance right there, and the waterfall seems to be better. So these, the bearish ones are gonna be stronger than the bullish ones. The bullish ones are gonna be for short-term turning. So it reached the order block back into that favorite gap. Yes, we got now setting short there, targeting that Howari favorite gap, and then if it hits this during the K zone, it goes back into the range and then comes back for the lows right there. As you can see, Killzone, Killzone, and prior to the Killzone was consolidation, and as Killzone starts, price expands. Now I was looking at this Howard favorite gap, and that's what happened like there. Then I went to sleep. Howard favorite gap happened during the Killzone. Price reacted there, and looking at where is the I look at this down cross candles as the bearish mitigation block, since we had high, low, lower high. Okay, so once price breaks there, why do you know that it's gonna break? You understand what took place right there, and the order flow seems to be bearish, so this has to be broken and then keep support there, and then come down here to that liquid area and then go down. So this is what I used. Okay, here's on that favorite gap. Very nice response, very nice response right there. Price went up, so selling short there, exit right there. Back there we got the favorite gap and the lows. Once retest the lows there, did not go into the mitigation block, goes down and creates relative equal low with that uh, previous lows. That was our target right there. So did not create the lows. That's why I was looking for more possible sales right there. So created more lows. New day opens right there. You can see the date changes, goes below the daily opening price, and now keeps going up. Kills on the swing point forms right there. Another swing point inside that uh, bearish mitigation block, and this is what I was looking for at main threshold, or the midpoint of that 15 minutes mitigation block. Keeping my stop right there. I might be stopped, I might be wrong, yes. So going through right there to there, that's what I was explaining. Okay, now let's go to the real data like this. That's what we have. I have seen consolidations, and I tried to enter during the kill zone. Oh, that swing point that formed inside the the mitigation block was insane with the 3 minute favor gap. Maybe the order block, yes, but I was looking at the favor gap right there. So like if I tried to sell short during the kill zone right here, okay, price keep coming down right back to the point, right back there. I do not hold trades like that. If it comes back to break even, I just let it go, since we have now it's trading higher and it's a consolidation, so there is a possibility for price to sneak you out and then go to where it's likely to go. So what I do, I wait for price to reach this consolidation. Where is it gonna go? Where it knows where to go. That's what I do. Exit at break even, or just right there. I do not allow being stopped out with my limit order, since the conditions did not meet. So you have crane lows, triple lows, and we have crane highs right there. But it's creating more highs don't what do you call this? The ascending wedge or whatever. I don't know about that. Create something like that. Can go up inside that figure and then down back there, or just keep going up. So once it start to create some indecision, I just leave and go. So back uh, to 7 V100 on this. What is that? Right there. All right. See, this is what we got. But this candles high is 33888 and price drops during my Killzone. Guys, that's what it is. Shit, it drops right there. Targeting what? You have very clean lows right there. That should be your target. And you got a 5 minute chart. Okay, you got a 5 minute chart. I mean, a 15-minute chart. What do we have on a 15-minute chart? We got an imbalance right there. So that's your target. Sha. Thanks. And if you want to watch more videos like this, please do not uh, hesitate to ask me questions, to ask me how I manage trades, to ask me what I avoid and what I do, what I did, and why it should happen like that. You can have paid one-to-one live session. You can have mentorship. I do mentorship, of course, using ICT concepts, and I do more detail about my Killzone. If you want more details about my Killzone, I'm available. Don't forget to DM me. Thanks and bye bye. This is Dolphin MT.